Hello and welcome. You have tuned into Market Fatafat on ET Now. I'm Shruti Sharma and with me is Ankita Saxena. And viewers, this is the show where in the next 1 hour we're going to be highlighting all the buzzers in trade today. And not just that, we'll also connect with our expert for today on the technical front as well as our researchers. But before that, let's have a look at the markets because Ankita, though it was a decent start for the Indian markets, but we are at the day's lowest point. Feels like before going into the weekend, the traders want to play it a little light.
Absolutely, a day of consolidation is what we'd call it today because we saw those record high levels in Nifty and then we see a bit of a consolidation coming in right now around those 26,170 levels. It is actually currently trading at the day's lowest point, and so is Nifty Bank. Nifty Bank is also at the day's lowest point, trading with cuts of almost 490 odd points right now. Top bank Nifty Bank losers include HDFC Bank, Kotak Bank, ICICI Bank, all trading in the red. Sectorally, Nifty Realty is the top sectoral loser, down almost 2.5%, dragged by Phoenix, Lodha, Godrej Properties. We did see those realty counters run up, on the back of the news coming in, on the reduction in the stamp duty. But after that, we are seeing a bit of a profit booking that's coming in on the realty names. On the gaining side, we have the metal pack that is shining away in trade as a top sectoral gainer. In fact, if you look at the names, we can see National Aluminium, Hindalco, JSW, SAIL, all of them doing very well in the trade today. That's the top sectoral gainer. And Auto Pack also was doing very well. In fact, it hit record high today, led by Exide Industries, Balkrishna Industries. So, auto sector also doing pretty well. Among the top Nifty gainers also, we can see BPCL, Sun Pharma, Cipla, Hindalco, Titan hold up in the trade with gains of over 1.5 to 2%. So that's where the market largely is at. A day of consolidation is what I'm going to call it, Shrishti.
Well, certainly. Let's wait by for the second half movement as well. But with this, viewers, let's move on and let's welcome on board Ashish Kyal, who's joining us to highlight all the counters that are looking attractive on the technical front, as well as from the research side. We have Priya with us. A very good afternoon to both of you. But before we come to you guys, let me highlight the first stock that we are putting the spotlight on, and that is United Spirits. If you will see, the stock, the last time I checked, was down about 3%. And if we look at this particular stock, then Macquarie has today come out with a note where they continue maintaining an underperform rating on this counter, and their target price is significantly lower than the current market price at just 1,100 rupees. They are saying that there could be flattish trends that were seen in Q2. Muted volume growth is also likely in the second quarter, and they also expect 5% of the sales growth and just 6% of the EBITDA growth to happen in the second quarter itself. They are also highlighting that the prestige volumes would be flattish on a YOY basis, but that could strengthen the luxury end. So on the back of this particular note, United Spirits is indeed in focus, and the stock was also seen to be reacting to this because the opening today was only down by 3 to 4%.
All right, that's United Spirits for you. But moving on to two counters that are in focus today. One is Trent and the other one is BEL. But why? On the back of the fact that leading to the cumulative inflows of about $830 million that is likely to happen in these two multi-bagger stocks. Trent and BEL are going to enter headline index Nifty 50 with effect from Monday. Now, as a part of the semi-annual rejig, the review of the board markets indices, NSE indices will remove DV's Lab and LTI Mindtree from the Nifty and include BEL and Trent. Now, the adjustment for the reshuffle will be done after the market closes today, and the chances will come into effect from Monday itself. Now, Nuvama said that it expects net inflow of about $495 million in Trent and another $336 million in BEL. Now, both stocks will get removed from Nifty Next 50, which is also known as Junior Nifty, and will be transferred to Nifty 50. So on the back of that, Trent and BEL both are in focus today, but right now they're trading absolutely flat. Given the market mood, they're trading flat right now in trade, but both of them are focused on the back of the fact that they will be a part of Nifty very soon.
All right, that's about both these counters. We're moving on. Ashish, very good afternoon to you, and let's talk about your first stock, and that is PCBL. Ashish, take us through how do you spot this on the technical front?
Hi, if you look at PCBL, we can clearly see a very strong rise that the stock has shown over the past few weeks. It has started moving from 280 levels and currently trading around 557. That's a very strong move. And the overall trend is positive. It is taking support, good support at 20 days and 10 days average. Looks like it's going on in the form of a third wave. We can expect the target of around 585 on the upside, and on the downside, one can maintain a stop loss for the stock at 535 levels.
All right, that is PCBL on the charts. But moving on to Marico. Ria, you picked out Marico for us. A brokerage note there that is upgrading the counter. Tell us, what is the brokerage note saying?
Yes, well, so Marico is in focus since NK has come out with a note on it, and they have upgraded their rating from add to reduce, and they've also hiked the target price to rupees 775 from the earlier rupees 700. Now they are saying that the improving growth trajectory is going to be a positive for Marico going forward, and in fact the focus on execution is going to help achieve growth along with demand recovery in the future. And they have also said that the valuations are going to be a factor to help improve the growth trajectory going forward. And reacting to this news, the stock is up around 1.5% today.
All right, that's about Marico, why the stock is in focus today. But moving on, let's talk about Hindustan Petroleum, and a lot of excitement in this particular space. Ashish, we are already seeing that BPCL is the top gainer in Nifty 50, but the next move up from this space could be HPCL.
Yes, it looks like absolutely. HPCL was forming a low around 400, showed a smart move on the upside, and the stock is forming around since 5 days. It has been forming a bullish candle. The momentum has increased, as we can see with the candle size, and this pickup on the upside is along with volumes as well. So the overall trend for HPCL is positive. We can expect a move towards the level of previous peak, which is 460 over short term, and on the downside, one can maintain a stop loss in the stock at 418 levels.
All right, that's about HPCL. But moving on, let's talk about a lot of pharma counters that are in focus on the back of a UBS note, because UBS came out with 6 counters where they have gone ahead and initiated the coverage. The 2 counters that UBS is bullish on are Sun Pharma as well as Cipla, and you will see that the both stocks are holding gains of more than 2.5%. But on the flip side, it's Zydus Life, Dr. Reddy's, Aurobindo as well as Lupin, where they have initiated the coverage with a sell rating. Why UBS is kind of coming out with a mixed commentary or some picks that are on both the sides, buy and sell. UBS is highlighting that the trend is seen to be weakening in the Indian and the US markets. Street is underappreciating the growth slowdown in both of these key markets. For India, they do see that the unbranded generics are 25% plus of the urban and 35% plus for the non-urban markets. But when it comes to the US generics, then the US generic market is declining. Of the US branded market is shifting to the biologics. So that trend is what they are trying to catch, and on the back of this news flow, all these counters are in focus. You will see the price action is also quite visible on the back of this particular report.
All right, that is the pharma counter that is in focus today. But Ashish, you picked out Colgate Palmolive for us. Tell us, what are you seeing on the charts for this one? This hasn't really done much in the last 6 months. In the last 1 month, I can see the stock consolidating. Is it ready for a breakout now?
Yes, the stock is ready for a breakout, even though the stock has not done much over the past 1 month or so. But if you look at the past 3 months or 6 months of performance, it has been an excellent outperformer. And we can clearly see it touching the 52 weeks high, trading near the day's high, and also giving a breakout of that consolidation pattern. So I'm optimistic that Colgate Palmolive can reach towards the level of possibly 4,200 on the upside, and one can maintain a stop loss for the stock at around 3675 levels.
Alright, that's about Colgate Palmolive. But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back to highlight more of the buzzers in trade right now. Welcome back to Market Fatafat, and on the World Tourism Day today, we caught up with the founder and chairman of Make My Trip, Deep Kalra, on the aviation sector and the IPO boom in the Indian markets. Let's listen into a slice of that conversation.
Of course, Indigo has done great, but now that Air India has got privatized, we're seeing Tata's pour a lot of money into that. And I think we are also going to see exciting things with some of the smaller players. Akasa's got funding, SpiceJet's got funding. So hopefully aviation sector is on the up now.
Can you give us a sense of the kind of growth that you're expecting to see so far as pilgrimage or religious tourism is concerned, and of course the other sectors?
So I can't give you specifics. We're a listed company and we will give guidance only when we, and we have our earnings round the corner. So we'll give you guidance. But these are...
sectors that you're betting big on.
Yeah, we remain excited about alternate accommodation. We think it's huge, which is homestays and villas. We're very excited about corporate travel, self-serve, we call it MyBiz, or fully organized travel. International short-haul travel, we think, is very big. And then, like you mentioned, pilgrimage travel, we think, is going to be a very big growth area. Besides the routine, but these are the 4 or 5 big areas for us.
So I have to, because you've been around for so long, and of course you've been a mentor to various startups as well. There is this IPO boom that is being currently seen. So many companies, so many startup companies after a few years of inception are looking at IPOing. Many say that this could be a bubble. In fact, this was a statement that came out from the finance minister as well, not really specifically related to the IPO sector, but overall. If there are headwinds in the global economy, then we are set for a correction. Your thoughts on both of these?
See, there's no doubt that there've been a spate of IPOs, and I think that's again happening because of a confluence of factors. Firstly, a lot of these startups have reached maturity. Secondly, when you take institutional capital, you take investor money, you do need an exit, and no better exit for an entrepreneur than an IPO. And thirdly, our markets are red hot.
And well, we continue to bring you the commentary from key voices on the sidelines of the TIE Global Summit. My colleague Sumita Karir caught up with the CMD and Group CEO of Ixigo, Alok Bajpai, to understand the ongoing trends in travel and aviation. Let's go across and listen in.
The story of premiumization is playing out in all segments of consumption, right from the lower middle to middle. And I'll give you examples like people who used to travel on sleeper class or 2S class, which is non-AC class. Many of them are now buying third AC, second AC train tickets. Many of the people who were buying third AC, second AC train tickets are now buying flights. And a lot of that is flowing into growth for our businesses as well. So if I look at my fastest growing businesses last quarter, right, flights was one of them. I mean, we grew 28% GTV, year on year in a market where only 4.5-5% growth occurred, in aviation.
Tell us the kind of traction that is coming from tier 2 and 3 towns and cities, because that's where the next consumption story is going to unfold.
Absolutely, and that's what our core story is all about, right? So if you look at our transactions, almost 94% of our transactions come with a leg in a tier 2, 3, 4 town.
Give us a sense of the kind of outlook that you have for the next couple of months, and of course your expectations from festive season and of course, New Year season as well.
Sure. So what was happening in India was last 2-3 quarters, aviation was a bit capacity constrained. There were not enough planes getting added. You had go first, go away from the system last year. Then some Pratt & Whitney issues caused some airlines to ground their planes. But now we started seeing capacity slowly starting to come back, especially on Indigo. We are seeing addition of new planes. Air India is also supposed to get more deliveries in the next couple of quarters. So I expect that there'll be some increase in capacity both on air and on trains where more Vande Bharat and more rolling stock is getting added.
Alright, but with this, viewers, let's get back to the stock-specific action then. And the next stock that we wish to highlight is SBI Cards, because today Morgan Stanley has come out with a note on this one, where they continue maintaining their equal weight rating with a target price of 745 rupees. What Morgan Stanley is highlighting, that SBI's August spending market share rose 18 bits on a month-on-month basis to 15.7%, but on a YOY basis, the spending fell 3%, and that was 4% that was seen in July, lower than 13% plus growth that was seen on the industry level. Now, this reflects the continued impact beginning February of the RBI's notification on the corporate card spending, and on the back of this news flow, SBI Card is in focus, though on a month-on-month basis there has been a rise, and what we are seeing is that the stock is also holding on to the gains of over 1.5%.
All right, that is SBI Card holding on to gains of over 1.5%. But moving on to the stocks that are in the sweet spot, that's the sugar stocks. In fact, sugar stocks have seen already ample of sweetness during the month of the morning session after the Food Minister Prahlad Joshi announced the government mulling increasing the ethanol prices and raising minimum selling price of sugar. Now, regarding sugar exports, Prahlad Joshi also stated that we will take a decision after looking into next year's production production and the availability of sugar. But the minister also said that a committee of secretaries is deliberating on a proposal to increase the minimum selling price for sugar, which has remained unchanged at 31 kilos per kilo since February 2019. And Joshi was optimistic about sugar production for the 2024-25 season starting October, citing favorable monsoon conditions, and ethanol prices set by the government have not been raised since 2022-23 ethanol supply year. So on the back of that, the chances of prices getting hiked, you can see Balrampur Chini trading with gains of 7%. There is Ed Perry that is also trading with gains. There is also Sri Renuka Sugar that is in focus today on the back of this. So all the sugar packs are trading with sweet gains today.
Certainly, and splendid gains coming in for these counters on the back of potential hike in the prices of ethanol. Not just that, Centre is also mulling a hike in sugar MSP. We caught up with ISMA President to understand where the government stands on this and the rationale behind the sought hikes. Let's go across and listen in.
We are anticipating about 333 lakh tons of sugar production in the coming season, and we also feel that this can be higher than this because of the very good rains that are occurring. All the reservoirs are full, so irrigation is also assured for the rest of the season, and therefore I think likely that we will be better than 333. That is what is estimated in the last meeting of the ISMA.
And when it comes to the availability of sugar in the market, the prices, you think so it's going to remain stable, or it will be shifting towards a lower side? Overall picture, what you understand, sir?
The sugar market prices now are much below the parity level for the industry. The cost of production of sugar is estimated to be close to 42 rupees a kilo, whereas the market prices are much below that. So therefore, this will be disastrous for the industry and also for the sugarcane farmers, who has to get the payment on time. The coming season, because of the increased FRP of sugarcane, the payment to the farmers is estimated to be 1.2 lakh crores. And all this money has to go from the private sector or cooperative sector. These are there is no government subsidy on any of the sugarcane procurement. So it's entirely handled by the private sector, unlike rice and wheat. Rice and wheat, there is a lot of subsidy which comes from the government.
Absolutely.
So therefore, this is something which is self-reliant, and for this to continue, steps have to be taken by the government to maintain the market price of sugar close to the parity level. So we have been requesting for increasing the MSP of sugar to 38 rupees or maybe 39 rupees. So this is the request what we have been making, and that is very essential because, as you know, that 65 to 70% of the sugar is actually consumed by the industry.
What we understand that.
Also, we're getting in Prashant Bayani, who's the VP of Institutional Equity Research and Sector Lead for Agri Inputs, Sugar and Hotels, to weigh in on the matter. Let's go across and take a look.
The manufacturers who are manufacturing ethanol, especially the ones who have come up with a capacity recently for juice ethanol, I think would be benefiting the most. I think Balrampur would be a beneficiary of it because they have come up with a facility in Mazapur, which is a dual feed facility running on juice as well as grains. I think for that asset, it has been, they have not yet got a chance to sweat that asset fully. So I think they would be among the beneficiaries in the listed space and within our coverage universe.
All right, then let's move on and let's go across to Ashish. Then Ashish, the next stock that you're focusing on is Jindal Stainless. Take us through how is this stock placed technically and what are the next levels that you are expecting for this counter?
If you look at Jindal Stainless, we can clearly see the stock has shown some consolidation, has been rising, and I can sense that there is some kind of a buying that is started to emerge into the material and the metal space. I think this sector will start taking the lead, and Jindal Stainless is outperforming in the entire sector as a whole. So one can create long positions here, expecting a target of around 860, which is the previous peak on the stock, and one can maintain a stop loss of around 759 over here.
All right, that is Jindal Steel. But with that, it's time for us to step into a short break. Don't go anywhere after the break. We're getting you more stocks that are buzzing in trade.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.